If you had held one Singapore dollar from 1967, you'd notice something remarkable. While global currencies like the US dollar, the British pound, and the Australian dollar have lost purchasing power to inflation, Singapore's money has quietly become an asset that actually holds its value. How did a tiny nation with no natural resources build one of the world's most trusted financial systems? In this video, we'll break down the 12 wealth strategies behind the Singapore dollar, lessons in monetary policy, investment discipline, and tax stability that global markets and even billionaires pay attention to. Because this isn't just about one currency, it's about how nations protect wealth, assets, and investor confidence in an uncertain world. 1. A currency of necessity. When Singapore became independent in 1965, it had no oil reserves, no farmland, and no real assets to fall back on. At the time, the island relied on a shared regional currency, which meant its financial future was tied to decisions made outside its borders. For a nation trying to attract investment and build credibility in global markets, this was a major risk. So in 1967, Singapore launched its own dollar. But here's the difference. Unlike many countries that treat money as a political tool, Singapore treated its new currency like an investment product. Every note was backed by reserves and managed with strict financial discipline. This wasn't just paper. It was a signal to the world that Singapore would protect wealth, stability, and investor confidence at all costs. That early decision to see money as strategy, not just symbolism, turned the Singapore dollar into one of the most resilient assets in Asia's financial system. Do no reckless printing. Most countries respond to economic pressure by printing more money, a quick fix that erodes the value of their currency. The US, the UK, even Australia have all done it, fueling inflation and weakening purchasing power. Singapore took the opposite path. From the very beginning, the government imposed strict limits on money supply. Every Singapore dollar issued had to be backed by real assets, primarily foreign reserves. That meant no reckless printing, no runaway debt, and no political games with monetary policy. This discipline gave investors confidence. It told the world, your wealth is safe here. In global markets, trust is everything. And Singapore built that trust by proving that stability matters more than short-term gain. Smart currency management. Most currencies either float freely on the global market like the US dollar or stay locked to another currency, like how smaller nations peg to the euro. Both systems have risks. Free float exposes you to speculation, while strict pegs can strangle growth. Singapore engineered something different, a managed float. Instead of letting the Singapore dollar swing wildly or chaining it to another currency, the Monetary Authority of Singapore, MAS, guides its value within a controlled band. This hybrid approach balances stability with flexibility. It protects Singapore's exports from becoming too expensive, shields the economy from global shocks, and reassures investors that the country's currency is not a gamble. It's a carefully managed asset in the IA. Global financial system, backed by real reserves. A currency is only as strong as the trust behind it. Many governments run their economies on debt, printing money without enough reserves to cover the risk. That's why inflation eats away at wealth in places like Argentina, Turkey, and even advanced economies when crises hit. Singapore flipped that logic. Every Singapore dollar in circulation is backed by foreign reserves and financial assets. This means the nation can defend its currency during downturns, reassure global investors, and prevent sudden collapses in purchasing power. It's the same principle as a well-capitalized bank. When people know their deposits are secure, confidence stays high. Singapore applied that same discipline at the national level, turning its currency into one of the most trusted wealth protection tools in Asia. 5. A fortress against inflation. Inflation quietly destroys wealth. A dollar today buys less tomorrow. And in countries like the US or UK, decades of steady inflation have chipped away at household savings and investor returns. Singapore took a harder stance. The Monetary Authority of Singapore makes controlling inflation its top priority, even above chasing growth. By managing the exchange rate and limiting excess money supply, Singapore keeps price stability at the core of its economic strategy. The result? Investors, businesses, and even ordinary citizens see the Singapore dollar as a shield. It's not just money, it's a store of value, protecting assets from the erosion that hits most other currencies. 6. In a global investor magnet. Strong currencies aren't built in isolation. They attract capital. And Singapore's dollar has become a magnet for foreign investment. Why? Because investors trust that their assets won't evaporate through sudden devaluations or reckless tax policy. From hedge funds to family offices, global wealth managers see the Singapore dollar as a safe haven in Asia. Combined with low corporate tax rates, political stability, and a world-class financial system, the country has positioned itself as a hub where money feels secure and low public debt. In much of the world, debt is the default. The US, the UK, and Japan run massive deficits, piling on trillions in public debt that future generations will pay for. And when governments borrow too much, currencies weaken because investors know inflation or higher taxes are coming. Singapore chose a radically different path. The state runs on budget surpluses, avoids reckless borrowing, and channels national savings into investment funds like GIC and Temasek. That means the government isn't printing money to cover deficits, it's investing money to build assets. For global markets, that's a signal of strength. Low debt means the Singapore dollar isn't propped up by promises. It's backed by real financial discipline. And that makes it one of the most credible currencies in the world. A sovereign wealth strategy. Most countries spend their surpluses on short-term projects or political promises. Singapore took a longer view. It created sovereign wealth funds, GIC and Temasek, to invest excess reserves in global markets. From tech stocks to real estate to infrastructure, this turned the nation itself into an investor instead of leaving its currency exposed. Singapore tied it to a portfolio of global assets, equities and long-term investments. The returns strengthen reserves, which in turn reinforce the Singapore dollar. It's a loop of confidence. Strong reserves protect the currency, and smart investments grow those reserves. Few nations manage this balance, but Singapore turned it into a financial model that investors worldwide study and envy. 9. Political stability. Currencies don't just rise and fall on economics, they rise and fall on trust. In countries where politics is chaotic, investors hesitate. A sudden policy change, corruption scandal, or leadership crisis can wipe out confidence overnight. Singapore built the opposite environment. Its government is known for predictable policies, low corruption, and long-term planning. That stability reassures global markets that the Singapore dollar won't be hijacked by short-term politics or reckless spending. For investors, that reliability is priceless. When you park wealth in Singapore, you're not just betting on the economy, you're betting on a system that values order, transparency, and discipline. 10. Trusted global hub. Singapore isn't just another financial center, it's a global hub for wealth management, trade, and investment flows. The city's banking system ranks among the safest in the world, with strict regulations that prioritize transparency and investor protection. This reputation matters. High net worth individuals, multinational corporations, and even governments channel capital through Singapore because they trust its rules won't change overnight. In global markets where volatility is the norm, the Singapore dollar stands out as a currency backed by credibility. Every deal made, every asset parked reinforces that trust. Trade-driven strategy. Singapore knows it can't rely on natural resources, so it built its wealth on global trade. Every container ship, every financial transaction, every export adds demand for the Singapore dollar. The more the world trades through Singapore, the more the currency is used and trusted. Unlike countries that inflate their way out of trade deficits, Singapore's strategy is different. Keep exports competitive, imports stable, and the currency credible. This trade-driven model ties the strength of the Singapore dollar directly to the health of global commerce. It's a feedback loop. Strong trade supports the currency, and a strong currency makes Singapore an even more attractive place for business and investment. 12. Perception as a safe haven. In global finance, trust is currency. and Singapore has mastered it. When markets shake, investors don't just look at numbers, they look at stability, transparency, and governance. Singapore consistently ranks as one of the world's least corrupt nations, with laws that protect contracts, assets, and investors. That reputation makes the Singapore dollar more than money. It's a store of wealth. In times of crisis, from financial crashes to geopolitical conflicts, global capital often flows into Singapore because it's viewed as a safe haven for wealth preservation. This perception itself is powerful. The more people believe the SGD is stable, the more demand rises. And in the world of currencies, demand equals strength. So what does the Singapore dollar really teach us? It proves that you don't need oil reserves, gold mines, or endless land to build a strong currency. What you need is discipline, credibility, and trust. While other nations struggle with debt crises, inflation, and currency devaluation, Singapore built a system that prioritizes fiscal responsibility, monetary discipline, and long-term wealth management. Every decision from foreign reserves to exchange rate policy was designed to send one clear message: the Singapore dollar is safe, reliable, and valuable. And that's the bigger lesson for the world. Money isn't just paper or numbers on a screen. It's a reflection of policy, reputation, and discipline. Singapore turned its dollar into a symbol of stability and financial strength, something even superpowers envy.